Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. All right, traders, it is Friday. We're going to get right into it because Friday we have numbers coming out that are big. Non-farm payrolls, no way those are going up, right? So that's going to get ugly. There's going to be more people out of work. Consumer credit, hourly spendings. We have average work week numbers. So there will be numbers tomorrow that should push the market down. But I got to say, traders, let me just say this. Friday, 02, 06, 09, this video is for Trading Friday. What I have noticed these last few rounds of numbers is that in a very bearish technical situation, in a very bearish market, the S&P and the indices are rallying on bad numbers. Now, I am the last guy that's going to say the bottom's in. You know me. I am a bear looking for 688. But there are times during a bear move where you start to get a leg up. Now, if in fact tomorrow these reports come out again bearish and these markets go higher, well, they are going to start to get above the Omni's proprietary moving average. Right here, Omni's proprietary moving average, the Nasdaq market got above it today, traders, and held. Now, the Nasdaq, you know, I feel leads the S&P around, and of course, I think that the Dow Jones Transportation Average leads the whole gamut. Right now, the Nasdaq is above the Omni average, and you know what? I want to give it a round of applause, traders, because, hey, baby, could you imagine if somehow we started to recover? I would love to be a bull. All right, so I'm going to show you a couple of charts which will illustrate where the markets are now, where they look like they're going, and where that Nasdaq is, you know, as opposed to my Omni average, where the S&P is. So what I'm looking at when I'm doing analysis this evening in the indices is that the indicators are just all over the place. Some up, some down, real mixed bag. The formations are absolutely bearish, but we're at a spot right now where if you just sell into this like you should as a bear, you may be at a turning point for a couple of days where this thing wants to go a little higher technically, and I'll show you what I mean by that. So, if there's that much confusion from what I can see technically in the analysis of the indices, what's a trader to do? Let's go after something else. I'm going after euro currency for tomorrow with the red Omni. I think euro currency is heading down. I have a great technical setup. We all know that interest rates in the U.S. are standing pat and interest rates in Europe still have to be lowered. That means no matter what, euro currency has to come down versus U.S. dollar. And there is a great technical setup that I'd like to show you right now, traders. Let's go to the charts. Okay, traders, what you are looking at now is the March S&P daily bar chart. We'll look at the S&P and a couple of indices first, and then I will take you into the euro currency. What you can clearly see is that we have this wedge formation. It's outlined in those red lines. They are coming together to form an apex. Inside of that wedge, you have an upright head and shoulders, which is a continuation pattern for the downside. So your formations are pointing lower. What I think is very interesting is if you just simply connect all these highs, we are kissing those highs right now, making this a smaller apex. We're kissing those highs, looking towards the Omni average. Reports that come out bearish in the last few days to week and a half to 2 weeks have been sending us higher. And I tell you what, if we get above this line tomorrow in the S&P, which is somewhere around 848 to 850, I think if we get above that tomorrow, and clearly above 853 would be the breakout, you can see 876 up here in a snap, traders. You got to be careful. I don't think we're going up. You know me. I'm a bear. These are bearish formations. But because this Omni average is starting to come into play, we all need to pay attention. Now, it's not touching right now. We're not above it in the S&P. And you would not use this chart and think, hey, Oscar, why would you think that it won't go down? Because it should go down, right? But I am a very conservative trader, and I have a responsibility to many Omniacs, and I will not make them short into something that looks like could be a fuse to something bigger. So what we do is we wait on the sidelines and see what's going to happen first let the markets test that area with its own money, and then us Omniacs will jump in if it looks good. So we're going to start the day off with a neutral posture. Let's look at another chart here, traders. Okay, the next chart on the block here is the mini Russell. It's now called the ETF 9. As you can see, once again, clearly there's a head and shoulders within this apex that's building, or this wedge formation. And once again, we're getting close to the Omni average. We are right at the top of that formation right now. And indicators are certainly more bullish than bearish across the board. So with this bearish formation and this head and shoulders bearish formation, you would absolutely think it has to go down. And I do think so. But once again, I want to see if this thing tests the Omni average now. If it goes up there and fails, well, I'll feel more comfortable selling again. If in fact it gets above that average, it may very well resemble the next chart you're about to see. And then who knows, maybe we have a little leg up that we can play with here. Let's look at the next chart. Okay, traders, now the Nasdaq daily bar March chart. Look at that formation. In this chart, which does lead the S&P around, mind you, we are now above the top line right here. We are above the Omni average, at least 1 day settlement, and indicators are clearly looking strong. Now, that raises an eyebrow for me. One of the major indices are above the Omni average. I am a trader. I am not a blind trader. Yes, I'm bearish, but when you see something like that, you put the brakes on and say, you know what? I'm going neutral for now. If this turns bullish, hey, I'll be a bull and I'll trade it. If it fails, back in the saddle and we ride it down next week. So what's a trader to do? Watch the next chart. I'll show you. This one's going to look great. All right. When in doubt, go shopping somewhere else. You are now looking at the euro currency chart. It is in a bearish formation. As you can see, this is a parallel channel sloping lower. Failed miserably at the Omni average, is in a clear head and shoulders, which is a continuation pattern towards the downside. We bounced off this line, came down, bounced off it again right here, and now we are sitting right here. Traders, look at the progression. You hit the top line, you hit the bottom line. Then you go to the top, down to the bottom. You race to the, well, you go up a little, hit the bottom, race to the top. Now, you touch the top one last time like it did here with the two bottoms. Down it will likely go. It's staying within a well-defined parallel channel. Failed miserably at the Omni average, as I've pointed out. The head and shoulders, I mean, do we need anything else? That is about as bearish as the day is long. I am selling that euro currency. We have stops in, traders. If we are wrong, so be it. We'll have our stop in place. But that looks bearish to me. It's a very nice piece of technical analysis which points towards the downside. So, traders, you've seen those charts? Look, you can see clearly that the indices look bearish, the news is bearish, and likely down they will go. However, as I said in that chart segment, traders, there are a lot of you Omniacs that rely on me to give you the best possible set of analysis I can give you. I will never, ever issue a trade recommendation that I don't feel 1,000% that I've done all the homework I can do and it looks like it will be on the right side of the markets. I can't do that tonight for tomorrow because we have to let these markets digest those numbers first. So I opt to go neutral in S&P. Traders, let them test that line and test that area. Let the market test it with their money. They're not getting Omniac money, I'll tell you that right now. So sit on the sidelines, S&P. Let's go look at that euro currency. I have a trade set up on my site right now. We want to sell euro currency. I won't give exact figures here, but once it crosses above 128, Omni wants to get short up there somewhere. If you'd like to know exactly where we're getting in and getting out and where we would place our protective stops, if the trade doesn't work, you got to stop it, right? You come on down to my site. It's www.livewithoscar.com. Come in my chat rooms. I'd be more than happy to share these recommendations with you. Traders, never trade alone. I have told you this in many, many videos. You can't imagine how many Omniacs are showing up at the Omni Trading Academy day after day. and they say to me, Oscar, you weren't kidding about never trade alone. It's so much better for you mentally and a better trading environment for you when you have a bunch of professionals in a trading room sharing ideas, trying to trade basically in the same direction and getting each of us through these rough and tumble markets every day, as opposed to sitting by yourselves in your living room, bathroom, basement, the trunk of your car. I don't know where you trade from, but I'll bet you it's lonely if you're sitting there alone at your keyboards. So come on down and join us, traders. I assure you it is a really, really good place to do your analysis and to trade the markets. All right, traders, I'm not going to do too much more in this video. Let's see what happens. Omniax, we will likely be trading S&P tomorrow, so be ready for that. For now, look at the euro currency. Do your own homework. Never take anyone's recommendation that you haven't done homework on, traders, because you know what? Bottom line is this. It's your fault no matter who you took the rec from, because you chose to take the rec and you probably might have not chosen to do your homework first. So make sure you always do homework, because either way, it's still your fault. You pulled the trigger, your trade, right? You got to own up to it. At least if you've done homework, you can say, look, I took the guy's rec. I did a lot of homework. I agreed with him. I can take that on the chin. And that's what you need to do, traders. Always accept your losses. Always know it was you who pulled the trigger, no matter whose rec it is. With that in mind, do your homework. Place your stops first. Never trade without stops, traders. This is a very dangerous game. And keep your emotions out of trading, traders. I tell you this every day. And one of the best ways I can help you to keep your emotions out of trading is to tell you to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Yeah. All the best tomorrow, traders.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.